Hey you guys, it's Janine here, and today I wanted to talk about the difference between GST and income tax. This is a question I get a lot. Most people think that they actually don't need to pay taxes in their business until they earn $30,000. And this can be a business that is incorporated or a business that is a sole proprietor that operates out of your home. Now, when we look at the difference of these two, they are actually quite different. So income tax is what you pay on the money that you earn personally or within your corporation, less a number of deductions and maybe credits. GST is different as it is a sales tax, and so you do need to pay it on items that you sell. So if you're a business where you have goods or services, if you are earning over $30,000 in the past 4 quarters, you will need to collect and remit GST and ultimately file a GST form on a quarterly or annual basis, depending on where you lie in the rules. Now, when it comes to GST, what we want to be mindful of is ensuring that we are charging individuals for our goods and services so that we can remit that amount to the government. Now, I did mention that in most cases, you don't need to collect and remit GST if you're making less than $30,000. But if you are a business looking to grow in the foreseeable future, it may make sense to actually set up your business so that you are charging GST right out of the gate and remitting it to the government. And it's very easy to set this up online through your CRA portal and ensure that you are in compliance with filing that GST return. When we talk about income tax, it's a completely different tax that you also need to file a form for. So when it comes tax time, you actually will need to file your personal, and if you have a corporation, a corporate tax return. Now, when it comes to this income, you are actually taxed at the marginal rate, plus you would include any of the deductions or credits that you get to take into account as an individual. The difference between the GST and the income tax is, of course, the rate at which you're being taxed at. GST is, of course, set at 5%, where your marginal rate will be based on how much income you actually earn in the year. There is a lot of confusion about when you need to file these forms, and your GST form will be due based on, again, whether or not you need to file quarterly or annually. And I'll leave a link in the description box below so that you can actually figure out when that form needs to be filed by. When it comes to your income tax for a personal standpoint, you do need to file and pay your income taxes by April 30th. And if you are a corporation, you have until June 30th to file your return, but payment is actually required in February or March if you are a CCPC. So those are some deadlines that you are going to want to remember. And at the end of the day, what you really want to take away from this is that GST and income tax are incredibly different. The threshold for GST is $30,000, whereas you will be required to file an income tax return the minute you do make $1 from your business. If you enjoyed this video, please give it a thumbs up and to subscribe to my channel. And if you do have any questions or comments about GST or income tax, please leave them in the comment section below.